California Housing Finance Agency announced last week a brand new program called the Dream for All Shared Appreciation Loan, which effectively means California is going to pay a down payment of 20% for you if you're a first-time home buyer. If you haven't heard of this yet, or you just simply want to learn more, then this video is for you. The 2022 to 2023 state budget set aside $500 million for the CalHFA to administer the Dream for All program. And the reason that they stated is that home equity is proven to be one of the strongest ways for families to build and pass on intergenerational wealth. And CalHFA is committed to improving equitable access to homeownership for all Californians. And starting March 27th, 2023, this program will become available until the budget of $500 million runs dry. But before we continue, if you could do me a huge favor by liking the video, subscribing to the channel, and maybe even sharing it with one of your friends, really helps me out, and it also helps spread the word about this amazing new program. Without further ado, let's jump into it. So to sum up this program, I'll first provide you with the program highlights and also the qualifications. If you're still interested and want to learn more about how this all works, stick around to the very end and I'll go through all the available details. Here's a few of the program highlights. No down payments required on your end, no private mortgage insurance, lower monthly payment, and also increased purchasing power since you're not having to come up with a down payment. In order to qualify, you must be a first-time home buyer or haven't owned a property in the last 3 years. You must have a minimum credit score of at least 660, maximum debt-to-income ratio of 45%. You can't buy a multifamily home, it's only single-family homes and condos that are allowed. Your income can't exceed the county income limit, which I'll include as a link in the description of this video. CalHFA homebuyer education course is required, and you also need to purchase a 1-year home warranty. How this all works though is through something called shared appreciation. CalHFA will provide 20% down in the form of payment assistance in the form of a second silent loan. There's no monthly payment associated with this loan. However, should you sell, refinance, or transfer ownership, you have to repay the loan provided to you, as well as a portion of your appreciation on the property. So for example, on a $1 million purchase price of a home, CalHFA will give you $200,000 for the down payment, meaning you don't have to come up with anything out of pocket. Meanwhile, your monthly payment is lower due to the larger down payment, and you also negated mortgage insurance by coming up with at least 10 to 20%. Holy smokes, Batman. And this sounds great and all, but what does shared appreciation mean? And if this program had a downside, this would be it. CalHFA is entitled to 15 or 20% of the appreciation gained from the purchase date. Whether you pay 15 or 20% depends on your income. If your income is between 80 to 150% of your county's median income, you pay 20%. But if your income is less than 80%, then you only pay 15%. Again, the link to the county median income chart will be in the description of this video. Essentially, California is paying your down payment for you. And because of this, they're biting off a chunk of your gained appreciation when you go to sell the house, or when you refinance years down the road, which in all honesty would likely be paid off during that transaction, resulting in little to no money coming out of your actual pocket. Overall, I feel that this is one of the most incredible financing programs to ever come out for first-time home buyers. And if you've been considering whether or not to purchase a home over the last couple of years, this is a huge opportunity for you to increase your purchasing power, keep more money in your pockets, and stash away that monthly payment into equity instead of throwing it away to your landlord every single month. I mean, it's just being wasted. Again, this program doesn't come out and won't be available until March 27th of this year. And it likely won't last long, but if you like to get ahead of the curve and speak to an expert about the topic, my family's been in the real estate industry for about 20 years. And they'd love to help you navigate the home buying process, as well as just help you out with any questions that you might have. I'll leave the link to their website at the top of the description of this video, as well as some of their contact information should you have questions and want to reach out to them. And that's it for now, folks. I'd love to hear what you think about the program in the comment section of this video. Do you feel like this is the program that you've needed to finally be able to afford a home in California, or are you going to simply wait for the interest rates to continue to come down? Let me know. I want to thank you so much for watching all the way through. I will see you in a couple of weeks in the next one. Peace.